What's going on, everyone, and welcome back to the channel. My name is Francisco, and today we will be discussing what is a stock. First off, let's start off by explaining what a stock is not. It is not a lottery ticket. You can't go on your phone and start buying these and then hoping and praying that they're gonna go up the next day by 5-10x, no matter what all these YouTubers were telling you in the past, because right now the market's kind of not doing too well, but a lot of the videos in the past of a bunch of YouTubers are saying 5x, 20x, 100x, like to the moon. It's not how it happens. There's fundamental reasons why stocks move up in price and why they move down in price. YOLOing your money in the stock market is not going to make you rich long term. You have to generate wealth in a responsible and knowing why it went up, how you got that money, so you can continue doing that over and over. And it wasn't just luck one-off where you did actually 10x, but the next time you do it, you lose all your money. So we're trying to be able to preserve that wealth. Now, a stock is an ownership of a business. So instead of saying I have these stocks are in my stock portfolio, you can say I own these business and they're in my portfolio. I own Apple, Amazon, whatever it is that you own. Having that mentality of I am owning these companies instead of just like I have these shares, my stock went up today, my stocks went down tomorrow, whatever, it's going to zone in more into these are my companies. I got to watch out for them. How are they making money? Because that's what's going to drive up the price of the stock. Revenues increase, profits increase, maybe user base has increased, the competitive advantages, the moats that they've built, and things of that nature. That's going to drive up the share price. The things that are going to take down the share price of a stock is negativity, pessimism. The company is actually doing bad and they don't know how to turn around, things of that nature. Now, I want to talk about the misconception of pricing with stocks. A stock isn't expensive because the price tag associated with it is $2,000. And it's not cheap because the price tag is $10. It's expensive or cheap relative to what you are buying. An example like this can be more relatable. Like, let's say an iPhone 13. In this example, an iPhone 13 costs $1,000. If you buy it for $1,000, you got what you paid for. If you bought it for $1,300, you didn't really, it's not worth it. You should be buying it at $1,000. Now, on the other end, if you bought it for $700, you're going to be really happy because you just got a nice discount on a really nice product. And that's essentially what we're trying to do. Buy good companies at good prices. Because if we underpay and the stock goes down in price, then we have a margin of safety that we've already built because we bought it at a cheaper price. As opposed to if you bought it over here on the opposite end where you overpaid for something and now it's even going down more than your $700 price. That's a $600 difference just in that. And it's retreating even more. So you want to be buying it over here when it's going down this way and not over here and then continues to go down because you're going to lose a lot of money. Now, here is what Warren Buffett has to say about stocks. And, this guy's been in the game for, I think he bought his first stock at 11 years old. So he's been in the game for a very long time. He knows what he's talking about. And he's one of the most wealthy people in the world. So please, have a go.
But people buy a stock and they look at the price the next morning and they decide whether they're doing well or not doing well. It's crazy because they're buying a piece of a business. That's what Graham, the most fundamental part of what he taught me. You're not buying a stock. You're buying a part ownership in a business. You will do well if the business does well, and if you didn't pay a totally silly price. And that's what it's all about. And you ought to buy businesses you understand. Just like if you're buying farms, you ought to buy farms you understand. It's not complicated.